my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view, using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me now introduce today's longer term chart.
Today I'll be looking longer term at Chicago wheat. Now for many years I have been highlighting the large, what turned out to be the very large, 2012 to 2022 descending scallop pattern that morphed into a rounded bottom and then morphed once again into an ascending scallop pattern. Last year towards the end of my commentary I said the following, and I quote, "With a 2-month blip up in September and October," so that is September and October 2022, and it is this blip that I wish to finally discuss. You see, I've looked closely at this blip up and a much smaller one in late 2021 as well as the big move up and down during 2022. And I've come to see it as a possible new, if extraordinary, pattern, since we might have an October 2021 to date possible, very, very thin and tall head and shoulders top. I'm not wholly convinced, as it is such a lanky giraffe of a pattern, but it is there with a seeming fairly flat neckline in the 738 zone, end of quote. That neckline highlighted in dark blue on my monthly chart is now currently at 764, and since that commentary last year prices have pushed lower, with the occasional foray higher such as we have seen in May and June 2024. Prices punched down and established below the 50% Fibonacci line, absolute Fibonacci line at 682, as well as the core 2019 originating uptrend, currently at 691, and the 5-year moving average, currently at 681, but have seemingly stopped dead at the 38.2% absolute Fibonacci line of 520.5. Now this Fibonacci line is within a wide band of congestion between about 560 overhead down to about 420 below, dating between 2014 to 2020. However, though we have been stopped dead, prices still seem somewhat keen to test lower, and we still have the heavy pressure of the tall and thin head and shoulders top form between that 2021 and 2023, pressing down on the market. Thus, I can lay out the potential targets below. So, we have a primary target X down in the 429 zone. For secondary, harder to reach target, I would actually say very, very much harder to reach target. Target X1 down in the 122 zone. I know you don't have to tell me target X1 is well below my monthly chart, but I can only tell you what I see. There are 2 other items I'd like to draw your attention to. Firstly, since mid-2023, especially taking into account the actions in 2024, we have a wideish bear channel, highlighted in red on my daily chart, currently at 460 to 698. This seems like it may be a suitable vehicle to follow the market low, especially if the market manages to push down through the 38.2% absolute Fibonacci line at 520.5, or if prices push up through the upper bear channel line. Then it can be seen as an early warning as to whether the market is changing away from the head and shoulders top and into something else. Secondly, and this is in 2 parts. Part A is to keep an eye on that 2016 to date purple highlighted uptrend below the market, currently at 481. Now uptrends are not very good in this market at the moment, but it's still worth watching this one, as well as within all the previously mentioned congestion. Part B, well, the 2-year moving average, currently at 608, seems to be starting to act as a declining cap on this market. So maybe worth paying attention to that as well.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.